Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be welcoming back one of our long-running guests, Paul Ghezzi, who's the CEO of Kontrol Technologies. They just came out with a big press release this morning talking about the company, giving some updates on their business and operations. So I wanted to invite Paul on to give us his thoughts. Before we do though, please take a second, hit the like button. It's 100% free to do and would really help me out. If you're not subscribed to the channel, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Kontrol Technologies, what your thoughts are on this sector moving into 2024, and the big operational update that came out this morning. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've welcomed back Paul Ghezzi. He's the CEO of Kontrol Technology. This is a company that we've covered for quite some time on the channel. Really interesting story. Paul, I know you guys came out with a big PR today. We wanted to get some coverage out on this in terms of your corporate update. So I wanted to walk through that, but before we do, thanks so much for joining us here.
Yeah, thank you.
Now, a number of big announcements, I'd say, in this update today. I'll put it up on the screen as we're kind of talking things through here, Paul. But the corporate update came out this morning. First thing it talked about was a new tech solution really focused on the cement industry. And we were talking a little bit before we started filming here about this area of your business and how maybe the retail community isn't super aware of it. So I wanted to get your thoughts on it, Paul, and what this really means moving forward.
Sure. So there's really two parts to our business. One we call commercial, which is traditional commercial buildings, office towers. People are very familiar with that. The other part of it is industrial. And on the industrial side, we're focused on monitoring emissions that come out from plants, and those are typically regulated emissions. And it could be industry related. It could be state or local. So we cover most of Canada and parts of the U.S. in our emission group. So the emission group is where we've come up with this new innovation, the dry kiln probe, which is really a new way to help large industrial facilities optimize how they manage and monitor their equipment in the industrial process. And so where this started was a government grant of around $130,000, which really helped support the innovation, a quick pilot, turning that pilot into a sale. So, we've done that in less than 12 months, which is pretty amazing. I give a lot of kudos to our emissions group for their technical ability and their ability to innovate. And so now that we've got this one customer in this one facility, they've got multiple facilities, but we're also going to be showcasing this to the entire, what I would call cement and large industrial industry as new innovation. And each one of these goes for about $200,000. It's a nice sale, but it really is, the launch of a new technology for us. And part of our DNA is innovating, right? It doesn't always work the way you want it to. It's not always perfect, but I think what we're really good at is getting some government funding, reducing the risk of the innovation, getting a pilot in place, and then having that initial sale is really helpful. So we announced that today.
Yeah, it definitely is very impressive. And I saw that government funding really de-risking some of the investment for the retail community, right? And that initial order, $200,000 US. So one of these surpasses the entire grant. Now, these would be for companies that are creating cement, Paul?
Or running large industrial processes where they're heating something, large furnaces that are constantly being monitored and measured, replacing existing technology, making it more efficient, but also giving that data analytics platform of how they're operating in their facilities.
For sure. And I know you mentioned that a lot of the emissions are government regulated. So definitely a very lucrative business and something that I think we can both agree is not going away anytime soon, eh?
Yeah, so I would say, the way we think about our business is we have a different view. A dollar of profit for us is a dollar of profit. And if you're making money and you're innovating on top of that and not burning your cash, that's really how we think about it. I think, the market has changed dramatically, and we've talked about this quite a bit, right? That over the past 2 years, if you're a tech company that's burning through cash, you're going to be in trouble, especially if you're a micro cap. If you're mid cap to large cap, you got runway. But micro caps are not going to be rewarded, for doing that. So we've always thought about it as, have a core platform that's making you money, that's profitable, innovate on top of that, and try not to go to the market in these conditions, which are kind of for microcaps are horrific, right? And liquidity's gone, and all those things that we've talked about in the past. But if you're profitable and you can innovate within that structure, there's a path out of this, and that's how we look at it.
Most definitely. And speaking of cash burn and balance sheet, I know you guys released a statement on that as well in the update today. Can you give us a bit of an update on balance sheet strength, debt strategy, repayment moving into 2024?
Yeah, certainly one of the things that's hurt us over the last 12 months is the challenges we've had with the balance sheet. So debt is down about 10 million, which is fantastic. That represents a savings of about $1 million a year of interest, which goes straight to the bottom line. So debt reduction puts us now at about $5.5 million of secured debt on the balance sheet, about $3.2 million of cash. We sold an operating subsidiary in December that closed in December for roughly 6.6. So another $1 million will be coming in over the next 3 months. So cash is good, debt's way down. I think, anyone who's concerned about the balance sheet shouldn't be concerned anymore. And of course, companies don't operate with zero debt. So we're kind of comfortable in, let's say, the 3 to 5 million range as we continue to grow. And in the past, we've talked about, debt to EBITDA leverage, getting it to a more reasonable number, which we are. So I think the balance sheet's in great shape. We have cash, we're profitable, and we're innovating. And so, I always get, honestly, the only question I get from shareholders is why isn't that reflected in the share price? And, my answer is always the same, right? That you just got to focus on building the business, being profitable. At some point, all that turns. I have no idea when. It's not really in the control of my control or anyone on my staff. But if you're building a real business and you're profitable, whatever value gets assigned to those profits, the market dictates that. And we are kind of in a swampy time for microcaps where there's lack of liquidity and not a lot of interest. But I would say it's much better to be profitable, than not be profitable. So we feel good about that. We feel good about the balance sheet. And I think anyone who is concerned about that, they can breathe a sigh of relief. We've always believed that we were going to work through this. That's our view. But I think we're in a show me market. You just have to demonstrate that you're doing it. And once you do it, the market will start to believe you.
For sure. And that profitability gives the staying power, right? It's exactly the same as a retail investor. The market can stay irrational a lot longer than you can stay liquid. But if you're profitable or you have alternate revenue streams, that can string you along while the market sorts itself out, which obviously can be frustrating for everyone. Now, speaking of money coming in, innovation, different areas of the business, I know the global HVAC, you gave an update on that as well. You guys wound down that business unit. That was a strategic decision that we covered on the channel. But you are expected to get, I think, $300,000 out of that as well, which never hurts, hey?
Right. So not a fantastic ending, but certainly could have been a lot worse. And I think, one of the things I kind of preach to shareholders is I'm the largest shareholder. So I have a vested interest in making this all work. And, global was definitely a work through and a workout. And, we're going to come out the other side better and stronger. But certainly it was a challenge going through that. And to have a positive result at the end, when the market was probably forecasting something a lot worse, to me is kind of beating that expectation. And, now it's about, growing, right? And I would say in my personal view, and, people can have different views on this, if you're growing without profitability, I don't think you're going to be in good shape this year. I think this year is a tough year for companies that are not profitable. So, our first approach, and we talked about this, strategic approach was get debt down, stay profitable, and then grow. And I think, now that we've kind of accomplished those major objectives, we can put our vision towards the growth path again of what we want this company to look like in the future. But you do need that stability of being profitable, or it's very difficult.
Yeah. Yeah, and the nice thing about this format, Paul, I know you've been on, I think we've had a relationship for a couple of years now, but everything you've came on and talked about each quarter or semi-annually or whatnot, the next time you're on, you've delivered on those promises, and you've been talking about profitability, debt reduction for years now, and you really are delivering. And like you say, a large personal invested interest in the company as well, which never hurts. So appreciate your thoughts today. Great update in my opinion. All the different elements of this are all positive. I'll kick it back to you for any closing thoughts or anything maybe we missed, but seems to be that things are now moving in the right direction here.
Yeah, so I would say, look, there's a lot more to come. A lot of work needs to be done. Things we think about for the future are tuck-in acquisitions that are profitable, that can grow us regionally. There's a lot of things we're working on in the background that's too early to talk about right now. But for us, the year's off to a great start, and we want to continue that going forward and really focus on the growth of the business.
Perfect. Well, we look forward to continuing this story. Paul, appreciate your time. I imagine it's a busy week for you guys. Always welcome on the channel, and we look forward to seeing the next update.
All right. Thank you so much.
Take care.